not responding. Okay, not responding. Okay, our objectives are measure initial cost of property, plant, and equipment, and identify the point where the capitalization of cost ceases, provide examples of the common classes of PPE, and state some of particular costs and capitalized for each class, and then identify the different modes of acquisition of PPE and state the initial measurement cost for each mode. Okay, these are the characteristics of property, plant, and equipment. Items of PPE have physical substance used in normal operation. Items of PPE are used in the production or supply of goods or services for rental or administrative purposes, no? Napasok dito yung parental, no? Kasi baka magtaka kayo where kasi ang nasa mindset natin pag parental, dapat investment property. Yung parental na binabanggit po dyan is yung movable. Kasi pag ang movable is parental, under pa rin po siya ng PPE. Pero pag ang immovable ang pinaparental, under na po siya ng investment property, no? Kaya check nyo kung movable or immovable. Pag movable, PPE. Pero pag immovable, investment property, no? And then long-term in nature, items of PPE are expected to be used for more than a year. When do we record? The cost of an item of PPE shall be recorded as an asset only that future economic benefits, no, associated with the item will flow to the entity, and the costs can be measured reliably. And the cost can be measured reliably. Initial measurement. The initial measurement is at cost. No? These are the elements of cost. No? We have purchase price, including non-refundable purchase taxes. No? After the deduction of the discount and rebates, and then plus direct costs that bring the asset to the present location and condition, and then plus kung meron tayong dismantling costs, plus kung meron po tayong um, dismantling costs. Okay? And then we cease capitalization cost of PPE. Recognition of cost in the carrying amount of item of PPE ceases when the item is in the location and condition necessary for it to be capable of operating in the manner intended by management. Measurement of costs. The cost of an item of property, plant, and equipment is the cash price equivalent at the recognition date. If the payment is deferred beyond the normal credit terms, the difference between the cash price equivalent value and the total cash payment is recognized as interest over the period of credit unless such interest is capitalized in accordance with past number 23 borrowing costs. And then ito po yung mga kasama sa cost ng land. Okay? Kaya dapat alam po nyo kung saan po siya papasok kung land improvement. Ang kaibahan ng land sa land improvement, ang land kasi is hindi siya nagdi-depreciate, pero ang land improvement is um, nagdi-depreciate, no? Kaya yun po yung kaibahan dyan, no? Ang land hindi siya nagdi-depreciate, pero ang land improvement ay nagdi-depreciate. Kaya pag-ingatan niyo po yun, no? And then, ito naman yung kasama sa cost ng building. Okay, pakibasa po, no? Kaya dito dapat alam po nyo kung saan papasok, kung land po ba siya, or sa building, or sa land improvement. No? You don't need to memorize, no? Ang kailangan nyo lang gawin is, or advice ko is, i-analyze mo lang siya, no? Kasi, um, hindi nyo siya ma-memorize. No? Hindi nyo siya ma-memorize. Kaya, ano po, pag-aralan po. And then, for the self-construction, yung self-construction natin is material, labor, overhead, no? Material, labor, overhead for the self-construction, no? The material, labor, and overhead. And then, in case meron po tayong savings, no? Yung savings ko, wala po siyang effect, no? Yung savings ko is wala pong effect, no? Nagkakaroon tayo ng saving kasi instead na nagpa-construct po tayo sa labas, no? Tayo na po yung nag-supervise or nag-manage dun sa transaction, that will be the scenario, magkakaroon tayo ng savings. And then again, no? Wala po effect yung savings sa libro. Wala pong effect yung savings sa libro. Okay? Building improvement, no? PPE po siya, no? These are costs incurred subsequent to occupancy of a purchased building or subsequent to completion of a self-constructed building that either increase the useful life of the building or improve its current estate. And then equipment, okay, yan po naman na equipment. Okay. And then pag lump sum purchase po siya, kailangan natin i-allocate based on the respective per value. Siyempre, kailangan natin malaman yung allocation kasi nga yung land ay hindi po siya nag-depreciate, no? And then, ito ngayon, no? Anong treatment ng demolition cost, no? Ang demolition cost is dagdag po siya sa cost ng new building. Tapos yung proceeds from the salvage value, dati kasi minaman niyo siya sa demolition. luma na po yun, no? Ngayon po, hindi na po siya minaminus sa devolution. In case may salvage, the salvage should be credited to other income. The salvage should be credited to other income. Wala na po siyang effect sa devolution, no? Anong gagawin? Dagdag po siya sa other income in case magkaroon tayo ng what is this? Demolition. In case magkaroon po tayo ng demolition, no? Okay, in case magkaroon ng exchange, no? Ito po yung priority order pag record ng new asset. Per value given up plus cash paid or minus cash received, per value asset received, and book value given up plus cash paid minus cash received. If there is a commercial substance. No? Pero kung no commercial substance, ignore the per value. The asset received from the exchange is measured letter C above. No? Per value given up plus cash paid minus cash received. And then acquisition to issuance of own equity instrument or debt instrument. No? The asset acquired is measured using the following order of priority: per value asset received and per value of the instrument issued. And then, pag may donation po, no? Pag income po siya, pag the donor is unrelated party, donated capital po siya if the donor is galing sa shareholder or owner. And then, government grant under PS number 20, no? If the donor is the government. Okay, apply po natin, no? Okay, game. Ayan. Let us now answer chapter 15, no? Property, plant, and equipment. An entity had the following assets. Okay. Land held for capital appreciation, manufacturing equipment purchased on installment basis, cash price equivalent, patents, no physical substance, land used in building, land for resales, building owned used as a warehouse, service equipment used in building maintenance estimated to have a 20-year useful life, small tools and minor spare parts used in equipment maintenance with an average useful life of 1 year, and then safety and environment equipment required by ISO. Okay, yung 3.6 hindi siya PPE kasi investment property. 3 million, yes. 400 hindi kasi tangible asset, intangible asset. Land use in business, yes. Land held for resale, hindi siya, held for sale po siya. Building owned use as a warehouse, yes. Service equipment used in building maintenance estimated to have a 20-year useful life, yes. Small tools and minor spare parts used in equipment maintenance, no. Safety and environment equipment required by ISO and DNR accreditation, yes, no. Answer is 12,950,000. Number two, what if we purchase, no? Magkano ang total cost? Sabi nga natin, purchase price plus the direct cost. Ano yung mga direct cost? broker's commission, rate, rate insurance, installation costs, calibration and testing costs. Hindi kasama yung training costs and general and administrative because this is automatically outright expense, no? The 15,000, the 6,000 is outright expense, no? The total initial cost of the equipment is 1,000,000 plus 50,000 plus 35,000 plus 5,000 plus 250,000 plus 20,000. That is 1,360,000. And then, ito no, yung samples generated to testing were sold. Di ba, under the new revision of the IES number 16, no? Credit na po siya sa other income. Dati kasi minaminus po siya sa cost ng PPE, yung proceed from sales or salvage, no? Ngayon hindi na po. Other income na po. Next, purchase price, no? Again, no? Initial measurement is at cost plus direct attributable costs, no? Glassworth Company acquired equipment for 896,000, inclusive of 96,000 refundable purchase tax, no? Okay, since refundable, yung refundable kasi is, ano po yan, value added tax. Hindi po kinakapitalize yung value added tax. Kaya tatanggalin po natin yung 96,000. And then, cash discount. Yung cash discount natin dito, whether taken or not taken, automatically you deduct, no? Automatically you deduct whether taken or not taken, no? Automatically you deduct. Okay, pagdating po sa cash discount, no? Whether taken or not taken, no? You automatically minus po, no? Remember that, no? And then, meron tayong plate and installation. Yes, now we capitalize. And then, may nasira tayo dito. Or pag may nasira po, expenses po yon. Tapos, tinanggal yung lumang equipment para ilagay po yung bagong equipment. Yung pagtatanggal po sa lumang equipment, hindi po siya i-capitalize kasi wala naman tayong benefit doon para sa bagong equipment. No? Therefore, the relocation and reinstallation costs are expenses. Magkano po yung capitalized? Answer 816,000. Next is pag lump sum purchase Sabi nga natin, i-allocate natin based on the respective per value. Okay, example, no? Known company acquired land and building for 10 million. Known company also made the following expenditures. Land titling cost 100,000, special assessment 40,000, payment to tenants to vacate the premises 80,000, and then option taken out on several pieces of property 300,000, building remodeling prior to occupancy 800,000, repairs and maintenance after occupancy 20,000, landscaping on the premises, no? Okay, where Japanese garden, ornamental plant, and backyard pound 240, and then meron tayong addition of driveway and parking lot of 80. The per value of the building is thrice as much as the land. Of the option taken, 120,000 relate to the land and building acquired, and the balance relates to the properties not acquired. Okay, di ba? Ang sabi is 1, 3, kaya 1 plus 3 is equal to 4, no? 10 million times 1 over 4 para sa land, 10 million times 3 over 4 para sa building. Land titling cost, yan to sa land. Special assessment, lalo sa land yan. May payment tayo para mabakit yung premises, no? Allocate natin sa land and building. 80 times 1 over 4, 80 times 3 over 4. Same din po sa option, 120 times 1 over 4, 3 over 4. Pero pag yung option na binayaran natin where hindi natin binili yung PPE, outright expense, no? And then, building, remodeling prior to occupancy, building, landscaping on the premises, land improvement, addition, driveway, parking lot, land improvement. Answer, land, 2,690,000, land improvement, 320, building, 8,450,000. Okay, next, another example, number 5. Sunset Company acquired land with old building for 6 million. After the acquisition, Sunset Company demolished the old structure and started the construction of a new building. Sunset Company incurred the following additional costs. Finder's acquisition date, 200,000. Taxes paid on property after acquisition date, 60,000. Demolition cost of all building, 130,000. Material, labor, overhead on the construction of new building, 10 million. May salvage material tayo for the demolition cost. And sabi nga natin, credit na siya sa other income, no? Case 1, nag-respond. The land and old building and no per value provide the journal entry. First, no, we purchase a land and then the land, meron siyang old building na ka-attach. I-allocate natin based on the respective per value. Finder's fee, in-allocate natin. And then, pag gigibain na to, no? Dapat pag giniba na yan, loss na to. Land registration, land. Unpaid taxes prior to acquisition date, land. Demolition cost of old building. New building po siya, no? Tapos yung proceed from sales of salvage material, no, other income po siya or scrap sales, no? And then material, labor, overhead, building. We have land and new building, 5,528 and 10,130. And then these are the journal entries. No? Okay. What if wala tayong fair value? Siyempre lahat is pasok natin sa land. Yung pagpapagiba ng old building sa new building. And then material, labor, overhead, new building. And then journal entries. Okay. Next is decommissioning cost or restoration cost. No? We learned that the decommissioning and restoration costs are capitalizable. No? Straw company acquired mining equipment for 20 million. Additional costs incurred in readying the equipment for intended use amounted to 10 million. Straw company is obligated to uninstall the equipment and restore the installation site at the end of the equipment 8 year useful life. A process which is straw company um, estimates to cost about 4,000. No? Purchase price 20 million, direct cost 10 million, and then we capitalize the decommission cost. No? The decommission cost must be recorded at present value. No? You get the present value factor of 10% for 8 periods multiplied by 4 million. No? That is 1,866,030. No? 20 plus 10 plus 1,866,030. Total cost of equipment is 31,866,030. Our journal entry is as follows. We debit equipment, 31,866,030. Credit cash, 30 million. And credit asset retirement obligation, 1,866,030. And then for the self construction, to material, labor, and overhead, no? Okay, ngayon, no, saan natin ipapasok? Ganyan yung mga tanong, no? Kaya dapat alam nyo kung saan yung papasok. Um, Purchase price of land, syempre land. May survey sa land. Architectural and engineering, building. Building permit, building. Temporary structure, building. Yung site clearing, land. Excavation and backfiling, no? Or peeling, no? Building. Construction material and labor, building. Insurance cost, building. Abnormal loss on wasted resources, and then uninsured accident, expense. Safety inspection and supervision, building. Income from incidental operation, capital loss. And then electrical, lighting, and wiring works, no? Building. Plumbing and sanitary works, no? Building. Elevator, building. Finishing, building. Pavement and parking, building, kasi kasama siya sa blueprint. Clerical and other miscellaneous costs, building. Cost necessary for design change, building. Rental, construction, building. Savings, ignore. Answer, 8 million and 32 million. Okay, acquisition to exchange. Check if there is a commercial or no commercial substance. Pag commercial substance, may gain or loss tayo on exchange and then record at fair value. Pero pag lacks commercial substance, no gain loss on exchange and then ignore the fair value. Okay? Kaya for commercial substance, no, fair value given, cash paid, new asset, or minus cash received, new asset. Fair value given minus book value given is equal to gain or loss on exchange. Kaya under commercials, no, um, ang nagbayad dito si I, no, kay S, no, bayad siya ng 300,000 kasi mas malaki yung fair value ni S kaysa kay I, no. Journal entry, no, fair value given of 1.2 plus cash paid, debit new asset 1.5, credit old asset 1 million, credit cash 300, and then the differences is gain on exchange, no. Cash paid 300 plus fair value given, no, 1.2, new asset is 1.5. Okay, book value given, okay, um, equal to 1 million, no? Kaya 1 million minus 1.2 equal to gain on exchange, no? Saka, debit new asset 1.2, debit cash 300, credit old asset 1.4, and credit gain on exchange 100. On the other hand, pag lacks commercial substance, walang gain, walang loss, no? Where ignore per value, book value given plus cash paid or book value given minus cash received is equal to new asset, no? Wine barrel 1.2. Okay, wine barrel, no? New 1.3. Wine barrel old 1 million and credit cash, no? Wine barrel 1,100,000, debit cash 300, and credit wine barrel old 1,400,000. Under no commercial, walang gain, walang loss, ignore fair value. Okay, next is issuance ng shares. Meron tayong priority order. Asset is equal to fair value asset received. Kung wala, fair value stock issued. Kung wala, fair value stock issued. E-company acquired a machine in exchange for 10,000 of its own shares with par value of 10 peso per share and fair value of 130. Assuming the cash selling price of the machine is available, therefore we debit machine equal to the cash price equivalent, no? Debit machine, 1.4. Credit capital stock at par value, 10,000 shares times 10. And excess is share premium. On the other hand, if the fair value of asset received is not available, no, the second priority is the fair value of the asset received. And the fair value asset received is 130 pesos per share. The debit machine, 10,000 shares times 130 is equal to 1,300,000. Fresh share capital, 10,000 shares at par value, 100,000. And fresh share premium, 1,200,000. Okay. A company acquired a machine and as consideration, issued a 3-year non-interest bearing. No? Okay, gamay na gamay mo na yung mag-compute ng present value, no? Alamin natin yung cash price equivalent. Kung wala yung cash price equivalent, that is the time we compute the present value. The cash selling price of the machine is 1.4. Given po yung cash price equivalent value, yeah, with debit machine equal to the cash price equivalent value, 1,400,000. The credit notes payable, the face value is 1.6. And the difference is what? Discount on notes payable. For case number 2, the cash selling price of the machine is not available and therefore we compute the present value. You get the present value factor of 10% for 3 periods multiplied by 1.6. With debit machine, 1,202,000. Credit notes payable, 1,600,000. And the difference is discount on notes payable, 397. And then for donation, no, at per value, yung donated capital, credit po siya sa share premium. And then yung income from donation, credit po siya sa other income. Sa donated capital, any transaction cost incurred, bawas po siya sa donated capital, hindi po siya ika-capitalize. Donation must be record at per value. Abu-abu ka, no? Receive a machine from a donation. The machine was originally acquired by the donor for 1 million and had a carrying amount of 280,000 in the donor's books at the time of donation. The machine has a second-hand value of 320,000. There are no conditions attached to the donation. Provide the entries assuming shareholders, assuming unrelated. Pag shareholders, we learn donated capital. Pag hindi siya shareholder, credit income from donation if there is a no condition attached. If no condition attached. That's it now for chapter 15. No? Okay, next. For chapter 16, no? Again, PPE pa rin. No? Wala pa rin. Wala, no? Wala. Hmm. Hmm. Ano? Wait lang, ayaw lumabas. Ayun. Ayun. Okay, game. Let us now discuss the subsequent measurement of PPE. No? Diba for the initial measurement at cost, no? The next question is what is the subsequent measurement? Either cost model or the evaluation model depends on company policy. And then we will discuss how to compute depreciation and estate when depreciation commences and when it ceases. Account for the revaluation of items of property, plant, and equipment. For the subsequent measurement, no, subsequent to initial recognition, an entity may choose either a cost model or a evaluation model. No? As its accounting policy and should apply the policy interclass. No? Kaya dapat interclass po, hindi po pwede na selected lang po. No? Hindi po pwede na selected. Dapat interclass po. Kung evaluation, interclass. Kung cost, it should be interclass. No? Okay. Cost model, after recognition, an item of PPE is measured at its cost, less accumulated depreciation and accumulated impairment loss. Depreciation is the systematic allocation of the depreciable amount of an asset over its estimated useful life. When computing for depreciation, each part of an item of PPE with a cost that is significant in relation to the total cost of the item can be depreciated separately. Depreciation begins when the asset is available for use, when it is in the location, condition necessary for it to be capable of operating in the manner intended by management. Depreciation ceases when the asset is derecognized or when it classified as held for sale under PFRS number 5, whichever comes earlier. There are various methods of depreciation. The entity shall select the method that most closely reflects the expected pattern of consumption of the future economic benefits embodied in the asset. However, a depreciation that is based on the revenue that is generated by an entity that includes the use of an item is not appropriate. No? Kaya it is inappropriate to compute depreciation based on the revenue. These are the different common types of depreciation methods. We have a straight line method. Depreciation is recognized evenly over the life of the asset by dividing the depreciable amount by the estimated useful life. Depreciation, historical cost minus residual value divided by the estimated useful life. For some of the year's digit no, depreciation is computed by applying a series of fractions to the depreciable amounts of the asset. Depreciation is equal to historical cost minus residual value times the fraction. And how do we compute the fraction? Life times life plus 1 divided 2. No? Where useful life divide the SYD denominator. And then under SYD, no, where the life will decreasing per year, no? And then under double declining balance method, depreciation is computed by applying a fixed rate on the carrying amount of the asset at the end of each period. Unlike for other depreciation method, under double declining balance method, no, residual value is initially ignored when computing depreciation under the double declining. Under double declining, no, the carrying amount multiplied by the rate. And how do we compute the rate? 2 divided by life. Units of production method or activity method or variable charge method. The units of the production method relates to depreciation to the estimated production capability of an asset and is expressed in a rate per unit of output or per hour of input. Depreciation is equal to historical cost minus residual value multiplied by the rate. And then if we have a leasehold improvement, the leasehold improvement is part ng cost of property, plant, and equipment. And then this is to be depreciated over the useful life of the improvement or the remaining term of the lease, no? Whichever is shorter. Whichever is shorter. And then an option to renew the lease is considered when determining shorter between useful life and the remaining lease term. It is probable that the renewal option will be exercised. Kung it will be exercised. And then in case ng changes in depreciation method, useful life, or residual value, and treatment is changes in accounting estimate perspective application. Prospective accounting means that the change affects only the current period and future. The changes that affect the past periods. And then accounting for the replacement costs, no? Okay, we recognize no the replacement cost, but the carrying amount replaced shall be recognized. If the carrying amount of the replaced is part of indeterminable, no, the entity may use the cost of replacement as an indication of what the cost of the replaced part and what's at the time it was acquired or constructed. Revaluation model, after recognition as an asset, an item of PPE whose fair value can be measured reliably shall be carried at a revalued amount, being its fair value. At the date of revaluation, less subsequent accumulated depreciation and accumulated for impairment loss. And then for the revaluation, no, fair value minus current value, difference is revaluation, no, and then in case there is a tax rate, no, the OCI should be net of tax. Okay? And then these are the two methods of recording revaluation. We have proportional method and elimination method. Under proportional method, no, the gross carrying amount is adjusted proportionately to the change in the carrying amount. For elimination, we eliminate the accumulated against the gross carrying amount. Frequency of revaluation for items with significant and volatile changes in fair value, annual revaluation is necessary. For items in significant changes in fair value, revaluation may be made every 3 or 5 years. And then if we revalued, no, the entire class of PPE shall be revalued. The items within a class of PPE are revalued simultaneously to avoid selective revaluation and reporting amounts in the financial statement that are, no, mixture costs and values at a different dates. And then subsequent accounting for revaluation. Revaluation is initially recognized as OCI unless the revaluation represents impairment loss or reversal of impairment loss, in which case it recognized in capital loss. Subsequently, the revaluation is accounted for as follows. If the revalued asset is non-depreciable, the revaluation accumulated in equity is transferred to retained earnings when the asset is recognized. On the other hand, if the revalued is depreciable, we compute the piecemeal realization. And then we recognize PPE if nabenta na or if no future economic benefits. Okay. Okay, this one. And then kain muna tayo, no? May tatlo pang ano, na para. Pero matatapusin natin ito hanggang 9. No? Ayun, ayun. Okay, balik tayo ng 7:35. No? Dinner muna tayo. Okay? Kain muna tayo, no? Balik tayo ng 7:35. No? Dinner muna tayo. Okay? Okay, game, no? Tatlong ba to kaya, pero kaya na to, no? Kasi yung the rest, madali na lang yan. Okay, game. Ah, computation tayo ng depreciation, no? Ano? Game. Spin Company acquired a machine on January 1, 2021, no? For 500,000. The machine was estimated to have a useful life of 4 years and a residual value equal to 10% of the cost. Prepare depreciation table and journal entries on December 31, 20x1 and December 31, 20x2 under each of the following depreciation method. Straight line, time of the year's digit method, and then double declining balance method. Under straight line, no, historical cost or initial cost of 500,000 minus residual value, that is 500,000 multiplied by 10%, depreciable amount. Divide the remaining useful life of 4 years. Our annual depreciation under straight line is 112,500. We debit depreciation and per accumulated depreciation, 112,500, 112,500. While under SYD, where N, no, this one, N, N plus 1 over 2. And that is equal to 10. 4 over 10, 3 over 10, 2 over 10, 1 over 10, no? Multiplied by depreciable cost. If I said depreciable cost, historical cost minus salvage value. Depreciation, 180, 135, 90, and 45. We're under SYD, no? Every year, the depreciation expense is decreasing. The debit depreciation and accumulated 180,000. The debit depreciation and accumulated depreciation 135,000. And then under double declining balance method, now here, ignore the salvage value where 2 divided by life, no? 50% of the historical cost. And then in year 2, 50% of the net book value. In year 3, 50% of the net book value. And in year 4, make sure that the net book value should be equal to the salvage value of 50,000. Therefore, the depreciation expense for year 4 is balancing figure. For number 2, output method use the information in the preceding problem, except that the machine was estimated to have a total service life of 12 hours and a total productivity capacity of 360,000 units of a product. No? And then information on actual usage and production in the first 2 years is as follows. We have machine hours and then units produced 360,000, 120, 100. Prepare the journal entries on December 31, 20x1 and December 31, 20x2 using the units of production method wherein the depreciation rate is determined based on input and output. Where input 450 divided by 12,000 hours and then the depreciation rate is 37.5 per hour. Based on hours, no? 36 times 37.5, 3,000 times 37.5, with the depreciation expense and per accumulated depreciation. No? With the depreciation expense and per accumulated depreciation. While under output, we're 450,000 based on the units produced, no? 1.25 per unit output, no? Debit depreciation and per accumulated depreciation. And then for the leasehold improvement, this is to be depreciated over the uh, lease term, useful life, whichever is shorter. Glass Finish Company made some improvement on a leased property for a total cost of 450,000. The estimated useful life of the improvement was 6 years. The remaining lease term is 5 years, extendable no, for another 5 years at the option of Glass. At the time the improvement were completed, Glass was not yet sure on whether to renew the lease. No? Therefore, not sure, the renewal option is ignored because the exercise is not reasonably certain. No? Useful life, this term shall be shorter. 450 divided by 5 years, our annual depreciation is 90,000. And then again, in case there is a changes in accounting estimate, the effect is prospective application. No? Example, on January 1, 20x1, no? Compress Company acquired a piece of factory equipment for 9 million. Compress Company depreciated the machine over the useful life of 15 years and residual value of 600,000 using the straight line method. In 20x5, Compress Company decided to change depreciation method to SYD, and then it was revised useful life to 20 years starting from acquisition date and the residual value to 800,000. First, step one, you need to know the net book value of the beginning of 20x8, where 9 million minus 600,000 times 8 over 15, no? Because 8 years is the remaining life. That's the salvage value. And then revised life 20, the new, minus the age 7, remaining life is what? 13 years, no? SYD n plus 1 over 2, 91. Kaya our depreciation expense for 20x8 were 5,080,000 minus the revised salvage value, 4,280,000 times 13 over 91. Depreciation is equal to 611,429. Our journal entry is debit depreciation and per accumulated depreciation. For subsequent expenditures, we capitalize sa subsequent pag na-meet po yung capital expenditures. On the other hand, pag hindi na-meet yung capital expenditures, we charge outright expense. On January 1, 20X1, Dawn Company acquired a piece of factory equipment for 10 million peso. Dawn Company depreciated the equipment over a useful life of 10 years using the straight line method. And then a residual value of 800,000 was attributed to the equipment as a whole. On January 1, 2007, a major part of the equipment was replaced for a total cost of 3 million. The replaced part has no residual value. Provide the journal entries on January 1 under the following scenarios: replacement and then indeterminable. No? If we know the cost of the replace, no? We debit accumulated depreciation times 6 over 10 because that is the age of the asset, no? We credit equipment, the old, and the balance sheet figure is the loss, no? And then we capitalize the the new, no? Where we debit equipment and credit cash equal to 3 million peso. On the other hand, indeterminable, no? We debit accumulated 1.8. We credit equipment 3 million and balance sheet figure is a loss. And then we debit equipment and credit cash 3 million. Meaning, yung 3 million magiging basis natin since indeterminable. Pero kung determinable, wala tayong problema, alam natin, no? Okay, residual model. Okay. Hindi ko tuturing cost approach no kasi ito yung mas sanay kayo, no? At usually ito po yung nasa libro. Okay, check natin. Number 6. Corona Company determined the following information for the purpose of revaluing its building. Historical cost 30 million, accumulated depreciation 9 million, fair value 25,200,000, remaining useful life at revaluation date 8 years. Depreciation method straight line method and residual value is 1.3. The tax rate is 30%. Requirements: compute the revaluation surplus net of tax. Provide the entry to record the revaluation surplus using proportional method and elimination method. And determine the revised annual depreciation after the revaluation. Fair value is 25,200,000 minus net book value 21 million. 4.2 is the gross. 30% is deferred tax liab. Evaluation surplus net of tax is 2,940,000. Our journal entry, okay. First muna, no? Under proportional, no? So 30 minus 9, 21 versus 25, no? 25,200 divided by 21, 120%, no? Okay, kaya you just multiply by 120%, you multiply by 120%, no? Kaya debit building difference, credit accumulated difference, deferred tax bayad 30%, and revaluation surplus net of tax 2,940. On the other hand, under elimination approach, no, we eliminate the accumulated. We record the deferred tax bayad, we record the revaluation surplus, and balancing figure building. Balancing figure is building. Parehas lang yung sagot whether proportional or elimination. And then the revised annual depreciation per value minus salvage value, divide the remaining useful life, annual depreciation is 3 million. Again, no, for number 9, no, I will not discuss this na para hindi kayo, isang method lang po tayo. No? Huwag niya itong cost approach. Market approach tayo. P company revalue the following asset: historical cost, accumulated, fair value, remaining economic life, depreciation method. Requirement: compute for the total amount of revaluation surplus that is thus projected to retained earnings at the end of the first year following the revaluation date. Ang moral lesson dito, no? May piecemeal realization lang tayo pag depreciable. Wala piecemeal realization pag non-depreciable, no? For annual, no? Annually, no? With debit revaluation surplus. In 20X1, B company acquired a piece of land, 5 million. Subsequent evaluation of the land are as follows: 4, 7, and 9. No? From 5 million to 3.8, bumaba with debit impairment loss and right land. And then biglang siya tumaas, no? I-record muna natin yung impairment recovery, saka tayo mag-record ng revaluation surplus. And then, bumaba. Record, ubusin mo muna yung revaluation surplus. At pag ubus na, that is the time we record impairment loss. Kaya tingnan mo ito, ah. May impairment loss. Ayos natin gawin. From 5 million, may impairment loss. 1.2. Seven. 3.8 minus 7. Okay, tumaas, no? Kaya lang, i-record muna natin yung recovery na 1.2. And then after we record the recovery, dun lang tayo mag-record ng revaluation surplus. And then from 7 million, naging 4.9. Bumaba, no? I-write off mo muna si revaluation surplus. At pag na-write off na yan, dun ka pala mag-record ng impairment loss. What? Okay, paki-screenshot isa.
Sir, malabo po pag naka-zoom out.
Malabo, pa naka-zoom.
Opo.
Ano kaya? Ayan. Okay na siya.
Pa-zoom in po ng onte.
Oh, sige.
Palakihan lang po ng
Ayan.
Okay na po sir. Thank you po.
Okay, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay. Next, borrowing cost tayo, no? Hindi lang chapter pa, no? Ayan. Ayan. Okay, we now discuss past number 23, computation of the borrowing costs. No? State the core principle of past number 23 and then compute the capitalization of borrowing costs. Okay. Okay, these are the core principles. Okay? And then, wait lang. Borrowing costs that are directly attributable to the acquisition cost, construction, or production of a qualifying asset form part of the cost of the asset. Otherwise, the borrowing cost is expenses. Borrowing costs are interests and other costs incurred by an entity in connection with the borrowing of funds. Borrowing costs may include interest expense calculated using the effective interest method, finance charges in respect of finance leases, and then exchange differences um, arising from foreign currency borrowing to the extent that they are regarded as the adjustment to the interest. No? Okay, qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale, depending on the circumstances, and any of following may be qualifying asset: inventories, manufacturing plants, power generation facilities, intangible asset, investment property measured under cost model. The following are not qualifying assets: financial assets and inventories that are manufactured or otherwise produced over a short period of time. Assets that are readily for their intended use or sale when acquired are not qualifying assets. Assets that are routinely manufactured or otherwise produced in large quantities on a repetitive basis, and assets that are measured at fair value. Commencement of capitalization. The capitalization of borrowing as part of the cost of the qualifying asset commenced at on the date when all the following conditions are met. The entity incur expenditures for the asset. The entity incur borrowing costs. It undertakes activity that are necessary to prepare the asset for its intended use or sale. Suspension of capitalization. Capitalization of borrowing shall be suspended during extended period of suspension activity development of the qualifying assets. Cessation of capitalization. An entity shall cease capitalizing borrowing costs when substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. We have a specific borrowing costs, where under specific borrowing cost, interest expense on specific borrowing minus investment income earned on specific borrowing is equal to borrowing costs eligible for capitalization. For general borrowing, no, step 1, you compute the capitalization rate. Your total interest expense on general borrowing divide the total general borrowing. Average expenditures multiplied by the capitalization rate is the borrowing cost that may be eligible for capitalization. The amount computed in the formula above shall be compared with the actual borrowing cost incurred during the period because the amount should be capitalized equal to the lower amount. If there is a combination of actual, specific, and general, no? First, you compute the specific, and after you determine the specific, average minus specific, the balancing is what charged to general. Okay? Again, no? Dapat yung mas mababa po. And then, may tinatawag tayo contemporary and then traditional, no? Okay. Yung traditional, no? Diyan ako magpo-focus yan, no? Kasi usually ang nasa libro naman is yung traditional. Okay, kaya hindi tayo magpo-focus sa contemporary. And then FS presentation, qualifying asset not segregated from other asset in the financial statement. They are presented as regular asset under their normal classification as provided under other standard. Okay, this one. Okay, game. CR lang ako, no? Okay, game, no? Which of the following is not be considered as a qualifying asset? Okay. A, power generation plan that normally take 2 years. B, expensive private jet that can be purchased for a local vendor. A, haba, not laki. Haba, long. Okay. Tall bridge that usually takes more than a year and ship that normally take 1 to 2 years. Answer is letter B kasi ready for use na siya. Unlike A, C, D, substantial period of time before siya to ready to use. Kapag ready to use po, hindi po pwede siya mag-qualifying. Kaya meaning, pag bumili ka na ready no, for use, example, kotse, nangutang ka ng pera sa sa bangko, no? Yung interest is expenses, hindi po siya pwede i-capitalize kasi hindi po siya qualifying. Hindi po siya qualify. Number 2. Okay, wait lang. Okay. An asset is being constructed for an enterprise own use. The asset has been financed with a specific new borrowing. The interest cost incurred during the construction period as a result of expenditure for the asset is, okay, we capitalize, no? Kaya, as part of the historical cost of the acquiring asset to be written off over a period of useful life, no? Meaning, ang point lang dito, the moral lesson is we capitalize the borrowing cost. No? We capitalize the borrowing cost. Next, number 3. Okay? And then, internalize muna natin number 3. Ayaw umano. Wait lang, ayaw gumalaw. Okay. Number 3, which of the following costs may not be eligible for capitalization as borrowing costs under PS number 23? Answer is what? Imputed cost of equity. Kasi related po siya sa equity. Related po siya sa equity. Next is number 4. Capitalization of borrowing costs shall be suspended only during extended period of delay which had active development is delayed. Okay, this one is specific borrowing costs were on January 1, 20X1, ABC company obtained at 12% 1 million bank loan is specifically to finance the construction of customized equipment. No? Ano siya? Specific borrowing costs. No? The construction was started immediately and was completed on March 31. Excess funds had been invested and have earned investment income of 18,000. How much is the borrowing cost eligible for capitalization? We have 1 million multiplied by 12% minus investment income. The capitalizable borrowing cost is 102,000. No, 102,000. Wait lang nga, ayaw mo ba yun? Okay. Next, no, is general borrowing, no? Meron tayong step, no, na susundin, no? Where ABC company is constructing an office building for its own use, no? The following expenditure relating to the construction of office building were made. Construction expenditures, January 1, June 1, and November. Outstanding general borrowing, bond issued just prior to construction, 10%, 3 million, 8%, 1 million. Ignore the cost of equity capital. What is the capitalized borrowing cost? First, we compute the average expenditures, where we have 1.5 times 12 over 12, from June 1 to December, 600,000 times 7 over 12, and then from November 30 to December 31, 1 over 12, no? We have 1,875,000, no? And then we compute the average rate for 3 million times 10% plus times 8%. We have capitalization of 9.5%. 1,875,000 times 1.5% is equal to 178,125 versus the actual. You just compare the two, no? The lower amount is the capitalizable borrowing. Answer 178,125. Okay, combination of the Okay, nawala ako, no? Okay, government grant. Our objectives are explain the recognition and measurement for government grant. Explain the
Sir,
presentation. Yes.
nawala po dun sa number 7 sa borrowing ko.
Number 7.
Opo, nandun pa lang po kanina nung nawala.
Ay, wait lang. Wala. Ah,
Who made the black one?
Mami. Yes. Yes. It's not there. May ikot pa siya. Wait lang. Ikot siya. Start. Ayan. Saan tayo? Number?
7 po.
Ayan, 7. Okay. Ito na. Traditional lang tayo. Sige, ano na lang. Basta tayo. Okay. 1, 2, 3. 1, 2, 3. Tapos, yan. 1, 2, 3. Okay? Yung contemporary, hindi natin discuss yun. And last, number 8 is letter C. Okay? Punta tayo ngayon sa government grant. Okay. Government grant, no? Our objectives are explain the recognition and measurement for the government grant, and then explain the presentation of government grant in the financial statements. Definition. Government grants are assistance by government in the form of transfer of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. They exclude those forms of government assistance which cannot reasonably have value placed upon them and the transaction with the government which cannot be distinguished from the normal trading transaction of the entity. Other terms of government grant include subsidies, subventions, or premiums. The following are not government grant: tax benefits, free technical or marketing advice, provision of guarantees, government procurement policy that is responsible for portion of the entity sales, public improvement that benefit the entire community. Recognition, government grant including non-monetary grants at fair value shall not be recorded until there is a reasonable assurance that the entity will comply with the condition attaching to them and the grant will be received. Classification of government grant according to attached conditions. Grants related to asset. Grants whose primary condition is that an entity qualifying for them should purchase, construct, or otherwise acquire a long-term asset. Grants related to income. Grant other than those related to assets. Initial measurement. Monetary grants are measured at the amount of cash received, fair value of amount receivable, carrying amount of loans payable to government for which repayment is forgiven, discount on loans payable to government at below market rate of interest. Non-monetary grants, example land and ag resources, are measured at fair value of non-monetary asset received, alternatively at nominal amount or zero, plus direct cost incurred in preparing the asset for its intended use. The main concept in accounting for government grant is the matching concept. This means that the government grant is recognized as income as the entity recognized as expense, the related cost for which the grant is intended to compensate. Presentation of government grant related to assets. Government grants related to assets are presented in the statement of financial position either by gross presentation or net presentation. Under gross presentation, the grant is presented as deferred income or LIAM, while under net presentation, the grant is deducted from the computing for the carrying amount of the assets. Presentation of government grant related to income. Grant related to income are sometimes presented in the income statement either gross presentation or net presentation. Under gross presentation, the grant is presented separately or under general heading such as other income. While under net presentation, the grant is deducted in reporting the related expense. And then in case there is a repayment for the government grant, the treatment is changes in accounting estimate, treated as a prospective application. Or you apply the prospective application. Okay, this is the last one. Okay, last. Yes.
Naalala ko na punta sa upstairs.
What?
do that.
Okay.
Daddy. Hindi ka pa tapos?
What?
Are you not yet?
Okay, game. Number 1. Which of the following is within the scope of pass number 20 by government assistance to technical and public improvement for the benefit entire is not a government or not under pass number 20 kasi pang lahat siya, no? Kaya nga itong government grant na ito is magamot po siya, no? Kasi pag ang mag-benefit po is para sa lahat, hindi po siya sakop ng pass number 20. Kasi dapat ang magbe-benefit lang is siya lang, no? Kaya nga madamot ang pass number 20, no? Okay? Yung application yan, no? Kasi pag hindi benefit sa kung benefit po sa lahat, hindi applicable yung standard na yan, no? Okay. Okay. In the case of non-monetary grant, okay, which of the following is the prescribed under pass number 20? O, ano sabi? Record both grant and the asset at fair value of the non-monetary asset. Answer is what? Letter C. Number 3. In the case of grants related to an asset, which of these accounting treatment? Okay, answer letter B. Either a liability or a deduction from the asset. Number 4. In the case the grant related to income, okay, which of the following accounting treatment is prescribed under PAS 20? Okay, either credit siya as other income or bawas po siya sa expenses, no? Yun po yung um, correct presentation niya, no? Either bawas sa expenses or dagdag po siya sa income, no? Anyway, no? Kahit ano po yung dalawa dyan, no? Same lang naman yung effect, no? It is a matter of presentation. Eh, buo na yung mouse. Anyway. Okay. Use the following information for the next 7 questions. On January 1, 2021, ABC received 2 million grant from the government to aid the construction of a new building. The construction of the building was finished on March 31, 2022 for a total cost of 6 million. The building is estimated to have a useful life of 33 years and a residual value of 1 million. No? Okay. Sige, i-picture niyo muna ito na sa papaliwanag. Okay? 1, 2, 3, 4, 5. Next. 1, 2, 3, 4, 5. Next. 1, 2, 3, 4, 5. Okay, explain ko no, para mas maintindihan, no? Kasi hindi maintindihan pag ganyan eh. Bukas ako ng Excel, ha? Hindi kasi maintindihan pag ganyan. Pero na-picture nyo na, ha? Explain ko po, no? Para mas maintindihan nyo. Kasi hindi maintindihan pag ganyan. Okay, ito po. Kinig, ha? Ayan. Okay. Dalawang approach po doon sa government grant. Pwede siya i-record as a liability presentation or deduction sa asset. Okay, kunyari lang ha, January 1, naka-receive ka ng grant. Debit cash, credit liability. $1,000. Tapos December 31, i-amortize natin yan. Assuming yung naka-attach dyan is building and then useful life ng building is 10 years. No? Kaya we debit liability and credit income. For 1,000, divide 10. Tapos, kunyari, may building tayo, no? We debit building and credit cash. 2,000. Ano sabi natin? Useful life 10 years. Debit depreciation expense and accumulated depreciation. Where we have 2,000 divide 10. Kaya magkano yung balance ng liability natin? Meron tayong 1,000 minus 100. 900,000. Magkano balance ng building natin per 2,000 minus 200? 1,800. Income tayo na 100 at may depreciation expense na 200. Kaya again, no, under liability approach, no, we debit cash, credit liab, we debit building and credit cash. And then we amortize the liab, debit liab, and credit income. Total depreciation, debit depreciation, and credit accumulated. FX FS, may liability tayo na 900, net book value ng building 1,800, income, and then depreciation. But under deduction sa asset, ang nangyari po, di ba meron tayong building 1,800, i-minus po ito. Kaya ang magiging answer ng asset natin is 900. Liability, 0, no? Kasi naka-neto po siya. Pero again, no? Yung income, 0. Tapos yung depreciation expense is equal to 200 minus 100. No? Okay. Same lang naman yung effect. It is a matter of presentation. Okay. Same lang naman yung effect. It is a matter of presentation. Okay. Pero pag wala tayong condition attached, no? Assuming no condition attached, we debit cash and we credit income. We debit cash and we credit income. We record it immediately. Kasi wala naman po siyang condition attached. Wala naman siyang condition attached. Okay? And then, example ulit natin, no, nagkaroon ng changes in accounting estimate. Sabi natin prospective application. Debit cash, credit liab, no? Actually, 1,000, 1,000. Tapos nag-amortize tayo, debit liability, credit income. 100, 100. Yung sumunod na taon, sinisingil tayo. Eh, magkano na lang naka-record ng liability? 900. Kailangan natin ibalik yung 1,000. Balancing figure natin, meron tayong loss. Kaya kung dati income, ngayon, loss. Ang treatment sa bigay-bawi is changes in accounting estimate. Changes in accounting estimate. Okay? Kaya nga, kung deduction sa asset or under changes in accounting estimate, no? Where naka-record depreciation is 100. Yung kulang ng depreciation na 100, no? Or 200 minus 100, i-record po prospectively. Wala tayong retroactive adjustment. Wala tayong retroactive adjustment. Okay, that's all, no? Hanggang dyan yung first quiz ninyo. Okay? And then, request ko po na i-print po niyo yung handouts kasi hindi ko alam, baka May 30, hindi po ma-access yung files, no? Kaya, ano yun na, baka mag-expire yung Adobe ko po. Okay? Do you have any question?
Sir, yung sa number 1, sir, tanong ko lang, yung free technical, sir, hindi ba siya covered ng ano, ng past 20?
Hindi. Kasi, ito. Number ano yun?
Number 1, sir. Hindi po ba siya under ng government assistance?
Hindi. Kasi ano lang ang binigay sa kanya dito, wala naman siya na-receive. Ano lang siya, parang consultant lang, pakita ko sa'yo. Consultation lang, parang advice lang. Wala ka naman na-receive dito. Ano i-debit mo?
Sige po, sir. Thank you. Nabasa ko lang kasi sa libro. Sorry po.
Oo. Kasi ano i-debit mo dyan? Advice lang. Daldal lang, di ba? Okay. Wala kang na-receive ng consideration, no? Saka, sige, may pakita ko lang to, no? Alam ko yung sinasabi mo kasi. Ito, pakita ko lang. Ayan. Okay, yan po yung mga outside, no? Hindi, kasi ano siya eh, assistance siya, hindi siya grant. Magkaiba kasi yung government grant sa government assistant, no? Grant kasi, no? Okay, accounting for government grant. Eh yung assistant, ano lang siya, disclosure lang po siya. Okay, disclosure. Eh, ang tinatanong kasi is grant. Ito po is assistant. Kaya magkaiba ang grant sa assistant. Okay?
Okay po. Thank you, sir.
So, kung wala na, no, bali, next meeting, no, new lesson, and then start na tayo ng quiz number, for quiz number. Sige. Bye-bye po.